I know that trading psychology is not a very sexy subject, but if you are someone struggling to make profit as a trader, then this may very well be the most important video you could ever see. Let me tell you why. I personally was on the cusp of giving up on trading altogether because I could not figure out what I was doing wrong. I had a strategy, I had a system, I even had decent risk management, but I could not find a way to become profitable. And right as I was considering completely giving up, I found a 90-day challenge. I don't even know where I found this challenge at, but after taking it, it completely changed my mindset around trading. And I would go as far as to say that this 90-day challenge could possibly be the only reason I am now a professional trader. So in this video, what I'd like to do is share this 90-day challenge with you, along with a few other tips and tricks around trading psychology I've used to master my mindset. And if you stick around to the end, I'll also be giving you a full strategy that you can use while taking this 90-day challenge. So if that sounds good, go ahead and click that like button for me. Go ahead and subscribe if you are new, and I'll see you after the intro and disclaimer. So let's be real. Most traders don't even consider trading psychology at all, when it may very well be the main contributing factor to you not being profitable yet. And one of the main aspects of trading psychology that a lot of traders dismiss completely and never think about is switching strategies. Now, throughout my experience as a trading educator, switching strategies has been one of the main contributors to traders failing, which is the entire purpose of this 90-day challenge. So we're going to start off by taking a look at what this challenge is specifically. Then I'll give you a couple of other trading psychology tricks that help me master my mindset. And directly after that, I'll give you a full strategy you can use during this 90-day challenge. So let's go ahead and get started. This 90-day challenge is extremely simple. You're going to open up a demo account, not a real account. You're going to do this through a demo account. And what you're going to do is, in this demo account, you are going to trade the same exact strategy with the same exact risk management plan for 90 full days. You see, the biggest problem a lot of traders have that tend to switch strategies is, one, they are looking at a strategy on a very short-term time scale, like a week out. They're going, oh, this strategy didn't make money for a week, so now I'm switching to a different strategy. Obviously, the one I'm trading now doesn't work. It didn't make money all week, right? Well, that's not really the way that professional traders and the way you should be looking at trading in general. It should be more of a long-term time horizon, something like out of 90 days, not out of a week. So if you're someone who's been struggling with that and switching strategies just because one didn't work over a very short period of time, like within a week or two, then this challenge is going to help you tremendously. Now, I said open a separate demo account for a reason. If you're someone that's brand new or someone that's already been struggling with discipline, I don't expect you to be able to jump in and only trade this strategy for 90 days with this risk management plan. What you're going to do is open a separate demo account just for this challenge, and have another account where you can trade whatever you want to. So have one account where you can be as undisciplined as you would like to, and feel free anytime you have the urge to switch strategies or to change your risk management, revenge trade, whatever it may be. When you have that urge, do it in a separate account and follow the rules of the strategy I'm going to talk about later, or you can pick your own strategy for a full 90 days in this one account. And the really surprising thing to me, and what I think will surprise and help you in your trading journey throughout this challenge, is that I got to see the strategies I was trading and switching at the beginning of my career. Like that first week that it didn't work, I would switch to a different strategy. Well, I tried that same exact strategy for 90 days, and throughout a period of 90 days, it was very profitable. So the problem was not that I didn't have a strategy that worked. The problem was my mindset, my trading psychology, and my inability to continue trading a strategy for a long time horizon, which is what I think this challenge, will help you understand and be able to do. It'll help you loads on your discipline. So we're going to jump into that right after I talk about this next trick that really helped me out. Don't go anywhere. I'm going to give you a full strategy to use during this 90-day challenge in just a moment, and we'll go over a few more details about the challenge. But another huge aspect to traders switching strategies and having bad trading psychology is risk management. You see, when we're trading with live money, especially watching our hard-earned money go up and down, especially when it goes down, that makes it really difficult for us to stay disciplined to a risk management plan and not try to revenge trade with a much higher risk on that next trade, and not try to get greedy because we've been losing a lot, or get greedy because we just want to be rich tomorrow. We all do, right? And it also, the lower your risk will keep you from getting in that mindset of fear. A lot of traders trade based on fear, or don't trade based on fear. So what happens is you'll see two losses in a row, 3 losses in a row, and you've been risking so much that those 3 losses have lost you a lot of money. So the 4th trade will happen and you won't take it. And then after not taking it, you'll see that 4th trade go off to, 1, make up for all the losses you've already had. Plus, it would have put you into amazing profits, right? But you never took that 4th trade because your risk management was so high that it messed with your mindset and your trading psychology and kept you from being able to do so. So this 90-day challenge is going to completely fix that, because you're going to use the same exact risk management, and you're going to take every trade that happens that you have time for, whatever your schedule is, for trading based on one specific strategy in this account. And what you're going to be able to see throughout doing that is that sticking to a risk management plan and a strategy that's proven to be profitable over a long time horizon does actually equal profitable trading. So the second trick being, be sure to always use proper risk management based on your own risk tolerance. And this will act as a lever to keep your trading psychology in check and your discipline in check, because instead of losing massive amounts of money with a smaller risk management plan where you're risking less money every time you trade and you're bound to lose less money every time you trade, your emotions will play a much smaller role in your decision making throughout your trading. So now let's go ahead and jump into the full strategy you can use for this 90-day challenge, and also we'll go over the full details of the challenge itself. See you there. Now, on to the strategy that I used during this 90-day challenge, and the one I would suggest you use during this 90-day challenge as well. It's a strategy I've talked about before and used for years, but for those of you new and those of you that need a refresher on this strategy, I'm going to go ahead and go through a full tutorial of it right now. So this strategy is something I use for trend continuation trades, meaning going with the trend, and also for counter trend trades, meaning going against the trend. Let me talk about trend continuation first, as that is by far the easiest. Here we have trend continuation. What that means is prices are creating new higher lows along with new higher highs. When I see this, the previous high that was broken is one of the most likely areas for price to pull back to and then push up from. So this is the initial part of the strategy I am waiting on, is to see what I call a 1, 2, 3 move. I want to see price have a low, create a higher low, and then create a higher high. Once I have that, I go ahead and mark off this previous swing high that price has just broken. It has to be the previous swing high that price has just broken. And then I also want to make sure that this swing high, looking left, has at least been tested one other time. So this swing high must have been tested twice, and it must be the most recent high price broke in my new uptrend. Once I see that, I'm waiting for price to pull back and give me an entry here. We're going to talk about entries in just a moment. And if that sounded a bit confusing, no worries. I'm going to go through full examples on charts as well so that this really sinks in. For now, let's go ahead and take a look at a bearish trend continuation version of spotting these levels of structure. So in the bearish direction, we would be looking for quite the opposite. We're looking for price to push lower, create a lower high, and then a lower low. At the moment we create that lower low, I'm going to be marking off my previous level of support that price broke in this downtrend. Once I have that marked off, I'm going to be looking left to see if this is in fact a level that has been tested more than once. So at least twice. We have once, we have twice. If this is a level that price just broke in my downtrend and a level that's been tested multiple times, then I know I'm looking at that level as what I consider an OTZ, which stands for optimal trading zone, which means I'm going to be looking in that area for possible trades for trend continuation. Since we're in a downtrend here, that means possible trades to the downside or possible short trades. So that is the bearish version of trend continuation. Again, we're going to look at examples of this on the chart. So if you're confused, don't worry, you won't be by the end of this tutorial. But now let's go to the counter trend version of this strategy. So for counter trend, what I will be looking at is price might be doing something like this. And as we start to push higher, let's say the move from our previous swing low fails. And instead, we start to push up and we create another 1, 2, 3 move in the upwards direction, signaling a possible uptrend. What I'm not going to be doing is looking here for possible short trades. What I'm going to do is look above the previous swing high of price and then to the left, and the next level of resistance I see is going to be my resistance zone. So if price continues higher, breaks above this level once more and gets to this resistance level, that will be my counter trend level of resistance I'm looking at for trades. Now, the other stipulation of this level is that it also must have been tested at least twice looking left. So since this area was tested once here, twice here, and is the next level price is going to hit of resistance, then that is where I'm looking for possible counter trend trades to the downside. And what would happen if this goes on, just to make this even more clear, if we have something like this, this would be the start of an uptrend. We see a little head and shoulder pattern here, the start of an uptrend. If this happens, I'm not looking here for any type of possible short trades. Where would I be looking? Up from where price is now, past the previous swing high that price made before the pullback, and then looking left to find my next level of resistance. Then I'll be looking to see, was that a level of, it's so hard drawing backwards, was that a level of resistance that was tested multiple times? If the answer is yes, we have 1, 2, 3 tests of this resistance level, then this is my OTZ or optimal trading zone. And I'm looking in that zone for counter trend trades to the downside. Now, once more on the whiteboard, we're going to look at bullish counter trend to make sure you have at least a little bit of a grasp of this before we go look at it on actual charts. So from the bullish direction for a counter trend trade, we might see something like this. Prices are pushing higher, and then we get this big move down. So what I'm going to be looking for at this point would not be a possible long trade from here. This is nothing more than a pullback. And when a pullback occurs in a downtrend, the likely scenario is that that swing low is going to break. We're in a downtrend, right? So with that being the case, I'm not looking for long trades here. I would be looking below price and to the left to find my next level of support. That's where I want to look for possible counter trend buy trades from. And what's my other stipulation? This also needs to be a level that's been tested twice. Once, twice, this would be my OTZ or optimal trading zone. At this level is where I would look for possible counter trend trades to push the market higher. Now, I know that was a lot of information, so what I want to do is take you to some charts and show you some examples on real charts of these situations of trend continuation and counter trend trading of this strategy. And then we'll dive into some more details like stops and targets, along with all the details for the challenge itself. So there are going to be 2 different versions of this strategy, one for day trading and one for swing trading. But right now, I don't even want you to pay attention to time frame. I just want you to see if you can spot the correct levels. So let's talk about it. First off, let's talk about trend continuation. What are we looking at in terms of trend continuation? Well, we have a low, a high, a higher low, a higher high, a higher low, a higher high, a higher low, and we've just made what? A higher high. So if we were to draw this out, this is what it would look like. We would have our move up, higher low, higher high, higher low, higher high, higher low, higher high. With this being the case, what is the most recent swing high that was broken? It's right here. Okay, so what I do is go ahead and mark off a horizontal line. Almost always put that horizontal line on the bodies of the candles of that most recent swing high. And then what's the next step? Next, I'm just going to look left and ask myself, was this a level tested multiple times? For me, it's easy to say yes. Trading support and resistance is based on trading around zones and not necessarily perfect lines. So I can see that this has, in fact, been tested multiple times here. So what I'm going to do is create a little zone out of it, staying around the bodies of these candles here for my previous swing high that was broken, along with taking another horizontal line and putting it right there. So this is my zone for trend continuation support. If price pulls back to this level, this would be considered my OTZ. Next up, I want you to see if you can spot a level of resistance. If price pulls back like this, are we going to be looking here for possible resistance? Hopefully you said no. This would just be the swing high before the pullback, right? Which is likely to be broken if we continue in this uptrend. So in order to find a spot or a level that's likely to push the market lower, we actually have to look left after going above the new swing high prices made. Here's that new swing high. We would need to go up and to the left to find the next level of resistance. So here, that's pretty obvious to see. Hopefully you pointed this level out. Here we have a level of resistance. What's the next question I'm going to be asking myself is, well, are we at a level that's been tested multiple times? I'm going to use this like a zone. And yes, we have a zone of price here that has in fact been tested once, twice, 3 times by this market. So with that being the case, I'm going to be waiting for price to come up to this level, and this will also be an OTZ. Here's the difference. This is our trend continuation OTZ, and this is just our counter trend OTZ. So what happens to price? Well, let's actually move the market forward and see what happens here now that we have our levels pointed out. As we push forward, just a couple of candles, we can see that price eventually does in fact come into that first OTZ or optimal trading zone we have here on the pound dollar. This was our bullish trend continuation area. And what we're going to be taking a look at in terms of entries is dropping down to a lower time frame to look for possible entries. We're going to go over that in just a moment, but right now I want to stick to spotting out these levels, and then we'll go over entry stops and targets in just a moment. What happens next? Well, what you're going to see is price is going to continue up from our previous OTZ. Let's go ahead and click forward and see. As we continue higher, what do we hit now? Now we hit our resistance level OTZ, our counter trend level. So the likely scenario, since we've hit this level, is that we are likely to see some type of pullback from this level because it is in fact a major level of resistance that has been tested multiple times. So let's click forward and see what price does here on the pound dollar. We are actually currently right inside of this zone and starting to pull back from the very top of this zone here on the pound dollar. So that was just a good example of spotting out these levels on a chart using our trend continuation OTZ, which was right as price was pushing up and making higher highs, and also using our counter trend OTZs as price pushed higher into our next level of resistance. Now we're on the dollar yen. What I want you to do is see if you can spot the trend continuation OTZ along with the counter trend OTZ. Pause the video if you actually want to do that, but right now I'm gonna go ahead and point them out for you. So in terms of trend continuation, what have we just seen price do? Price has just made a low, a lower high, and a lower low. What does this mean? This means we're thinking downtrend. This is our 1, 2, 3 move I was talking about earlier. That is the best 3 I've ever written, but let's go ahead and continue. So with that 1, 2, 3 move, we're pointing out the latest level of support that was broken or the latest swing low broken in our downtrend. What's the next question we have to ask? Was this a level that has been tested multiple times? The answer to that is yes. We can see that pretty obviously. So now what I'm going to do is make a little zone out of this level. And this is going to be the trend continuation OTZ. So here's the trend continuation OTZ. And what are we going to look at for our counter trend OTZ? If price does this, is this now our counter trend OTZ? No, it's not. What is going to be our counter trend OTZ is a level that is below current price, looking left, that's already a support level. So here's our previous level of support. If we continue lower, inevitably, this will be the next level of support. Price hits. What I'm going to do is place a horizontal line on that level and ask myself, was it tested multiple times? As you can see, we have a zone here that we can make that is in fact tested multiple times. We have 1, 2, 3 times this level has been tested. So this will be our counter trend OTZ as price continues lower. Like so, we're going to be looking in this level for a possible counter trend bounce. Whereas if price continues higher from here, then we're going to be looking in this level, our OTZ here, for trend continuation and price to then fall from this major level of resistance. So that's our trend continuation and counter trend levels here on the dollar yen. Let's click play. As you can see, this is actually in real time. So in real time, here on the daily chart, these are the levels I actually have pointed out, and I'm looking to trade this strategy in throughout the next week or two, depending on when price gets to these levels. As I said, we have swing trading versions of this strategy, which is where I point out my levels on a daily chart, and then I go down to the 4-hour chart and 1-hour chart to look for possible entries inside of them. But we're also going to go over a day trading version of this strategy, and we're going to take a look at both of those along with the entries, stops, and targets right now. The first entry, stop, and target we're going to take a look at is a bearish trend continuation trade. As you can see, we have prices here on the euro yen pushing lower as we've come down to create a low, a lower high, and now a new lower low. At this point, we're looking back at that most recent low that was broken right here and asking ourselves, has it been tested multiple times? As you can see, looking left, this level has been tested multiple times. So what we're waiting on is for price to continue pushing up now in a pullback scenario. And once we get into this zone, I'm actually going to be dropping down to a 4-hour chart from the daily chart. Now, what I'm looking for here is my actual entry reason. And simply put, the entry reason that I'm going to use for a short trade where I'm looking to go bearish is just a double top with a convincing red candle afterwards. So what that's going to look like is one top, a double top, and at the end of this double top, I need to see a convincing red candle. And what I mean by that is just a red candle that is not a doji. So let's go ahead and push the market forward and take a look at what happened here on the euro yen. As we push higher, we don't have a double top yet, but we do have what I would consider our first top here. So when I'm looking for double tops, I need to see that the second top comes up to at least the bodies of the first swing high, but does not close above the high of the first swing high. So this area is what I would consider a termination zone. I need the wick of a candle to at least touch this. The body of a candle can close above, or in this, excuse me, but what cannot happen is a body of a candle closing above this. That would mean trend continuation to the upside. So this is the only thing I can't see as long as we have a candle touching this termination zone. Let's move price forward and see what happens here. As we push price forward, you can see that we're now into our termination zone. So at this point, the only thing I'm looking for an actual entry to press the sell button and go short here on the euro yen is a convincing red candle and or a red candle that is not a doji. And there it is. There is a red candle that is not a doji. So with that being the case, I'm going to go ahead and put an order form on here to be able to show you what the stops and targets are. That would be our entry candle. That entry candle, if you look up to the left, you'll see what is called an ATR indicator. This is super easy to find. Go to your indicator tab and just type in ATR or average true range, plot it on the chart. I did not change any of the settings. These are completely the regular settings that it comes with. But what I'm doing for stop losses for this specific strategy is I'm multiplying the ATR, which is this number right here. We discount the last decimal, by the way. So this is 52. So I multiplied the ATR times 2, and that's my stop loss. So 52 times 2 in this specific case would be around 104 for my stop loss. And I'm going to use a 1.4 to 1 reward to risk ratio. If you look in the middle of the position tool right here, you'll see 1.4. That's telling me I currently have 1.4 times my stop loss for a target. So that's the way my trade setup would look. And here in this specific case, this is actually a trade we sent out to TTC University members. I'll put it right over here. It is not completed yet, but this trade is currently active and live. Let's go ahead and hit play and I'll show you where the market stands at this moment. We're right below break even. We did have a nice initial push down about to the neckline of the double top, but since then we've pushed back up, and again we're really close to break even. Hopefully next week we'll see prices of the euro yen fall down here and hit our targets. But that would be the setup for a short trade and the entry, stop, and target for a short trade. If you've ever seen some of our other content, you may have heard of CEST. CEST stands for conditions, entries, stops, and targets. The conditions here being looking on a larger time frame for a swing trading scenario, that's the daily chart, and finding these OTZs or optimal trading zones, which are just levels of structure that have been tested multiple times. The entry itself is a double top with that convincing red candle. The stops are 2x, the ATR indicator right up here, and the targets are 1.4 times our stop loss. So that is the entire CEST of this strategy for a short trade. Let's take a look at a bullish entry now. For a bullish example, we're going to be looking at the Aussie New Zealand. I want you to try to spot out the OTZs here. Should be extremely easy. The reason is I forgot to delete these boxes. So never mind. This is going to be our trend continuation OTZ, which should be easy to spot. We have this low that just got broken, and it is a low that's been tested multiple times. Now, we're actually going to be looking at a counter trend level here for this specific example. So what do we have to do? We have to look below where price is and to the left to find the next level of support price is likely to hit. Not likely to. If it continues down, will inevitably hit. If it doesn't continue down, it may not hit it. But this is inevitably the next level of support. If price continues down, it will hit. After we see that, we need to look left and ensure that this has been a level tested and used by price multiple times in order to classify and verify it as a valid OTZ or optimal trading zone. Once we have that, we want to see price push even lower, which we will do right now. And we want to see price get into this zone. So at the moment, we have gotten into that zone. What's the next step? For me, the next step is dropping down to the 4-hour chart for a swing trading scenario and looking for a possible trade. What do I need to see in this case? I need to see a double bottom, the exact opposite of what we were looking for, but this double bottom does in fact need to be followed by a convincing green candle or a green candle that is not a doji. So let's see what happens if we move price forward here. We get what I would consider a first bottom right here. So with that being the case, on a double bottom, what I need to see is price come down and at least touch the bodies of that first bottom, but we cannot see a candle close below the low of that first bottom. So what I need to see is price pull back into this termination zone, and I can see a wick touch the very beginning of that termination zone. I can see a candle inside of it, but I cannot see a candle close below it because that signals trend continuation to the downside. So let's see what price does as we click forward here. We have prices pushing lower. Now we're inside of that termination zone, and now we've gotten completely inside of our termination zone. The only thing we need to see now is that convincing green candle. Let's take a look. And right in there, we have exactly that. We have a wick that goes below our low of the previous low of this double bottom, but that's completely fine. As long as we don't get a close below this low, we still have what I consider a valid double bottom. This would be a valid convincing green candle. So at this point, we have C and E taken care of the CEST. Our conditions are met because we're in an OTZ. Our entry is met because we have a double bottom with a convincing green candle. Let's go ahead and put an order form on the chart and talk stops and targets. So for stops, 2x the ATR. What is the ATR right now? I'll have to move the red line out of the way. Can't really make that much bigger, so I'm sorry if you can't see that right up here, but that is 38 pips. So with 38 pips multiplied by 2, we're gonna have 76 pips as a stop loss. Let's go ahead and do that. 76. And something I will do is try to get my stop loss below the lowest low of the double bottom, even if it's just by a few pips. So even though 76 is what we should have, I'm going to use 86 just to get below that double bottom. I'm going to use a 1.4 to 1 reward to risk ratio, which puts it about right there. I'm going to click play, and we're going to watch and see prices come down and get stopped out on this trade. So that is right, ladies and gentlemen. This does not always win. As with any other strategy, you will have losses, but even though that's the case, this is a great example of the strategy I'm teaching you today. Again, every strategy is going to have losses, but those are the rules for a bullish version of this strategy, and that is the CEST of the bullish version of this strategy. So at this point, we've taken a look at the swing trading version of this strategy. The day trading version is literally identical on everything except we're going to be using different time frame. So if you're someone who's a day trader and that's the way you would like to implement this strategy, the only thing you're going to change is instead of doing like I was and going from the daily chart, looking for our OTZs or our levels, and then going down to the 4-hour chart for our possible entries, what you'll be doing if you want to use this as a day trading strategy is going from the 4-hour to look for the OTZs or the levels of structure, and then dropping down to that 1-hour or even 15-minute charts for possible entries. And that's how you would apply this in more of a day trading setting. But this is a great example of a strategy you could use for the next 90 days during this challenge. I want to stress this one more time. Do not do this on a live account. Chances are, even with this challenge, you're probably going to make some mistakes because you're not quite ready to trade live yet. So again, I'm going to stress, do not do this on a live account. Trade this on a demo account, and it doesn't even have to be this strategy. It can be any strategy, but the entire purpose of this 90-day challenge is to get you from someone that's consistently switching strategies and show you that trading the same strategy over and over, as long as it's a strategy that's proven to be profitable in the past, does equal profits over a long period of time. So let me break this down one more time. If you decide to use this strategy, what you're going to do is open up 2 separate demo accounts. One of those accounts is going to be just this strategy and nothing else. The other one, you're going to trade randomly, whatever you want to. You'll trade in the other one anytime you start feeling like switching strategies, trade in that other account. But for one of these accounts for the next 90 days, I want you to just trade one strategy. Again, it's completely fine if it ends up being this strategy that I've just taught you. And throughout that period of time, you're going to gain a lot of confidence in a strategy, could be this one, and you're going to understand why switching strategies is so detrimental to your trading success. And hopefully, after this 90-day challenge, it will benefit you in the same way it did me, because right after this 90-day challenge is when I started my true profitable trading journey, where I was able to stay disciplined to a trading strategy. My trading psychology skyrocketed. And although I still had losses in my trading, it was much easier to handle those losses and stick to a specific trading strategy after those losses whenever I completed this 90-day challenge. I hope that's what this challenge can do for you as well. If you are someone who is ready for some more advanced training and you're ready to take a more organized approach to your trading success, then we do have some space available in the TTC Forex University, and we would love to have you. The university has a full university style course that'll essentially break down my 10 years of trading experience, everything I've learned, in a very organized step-by-step fashion. Along with that, you'll also receive the Pro Trader Report, which will show you all the levels I'm looking at for the specific strategy you just learned each and every week on Monday. Along with that, you'll get email analysis of some of the trades I'm sending out, like on the Euro Yen you saw today. And on top of all of that, you'll also receive priority coaching support, which means it'll be me personally answering any questions that you have to ensure you have a smooth journey to accomplishing your trading goals. So if that sounds like something you're interested in, then all you got to do is click the top link in the description or go to www.ttcfxuniversity.com. If not, that's completely fine too. Just be sure you're subscribed here so you keep up to date with all the content we come out with. Make sure you click that like button if you enjoyed the video, comment if you made it to the end, and I'll catch you in the next one. See you soon.